Yo, what's good, my children? Listen, some people were still confused about what was going on in my last couple videos. They were like, I don't know what you're talking about. Okay. So I'm gonna try to break this down real simple. I even downloaded the replay mode. I got the little free trial now. Okay. The 31 days or whatever. So look, I'm gonna teach y'all piece by piece of like how everything goes. You know what I'm saying? But one thing I wanted to let you guys know is like number one, it's gonna get easier the more you see it. Like the more you watch the videos and like you train your brain to see it. But like you also have to go into the chart. You know what I'm saying? Like go by yourself. Like go at 8 a.m. one day, or even just look at tradingview.com and go if you want to use the replay mode and things like that and like back test or whatever. Do that. You know what I'm saying? So look, I'm a like this past week specifically was a really good week. You know what I'm saying? There could have been a lot of money that was made, especially on Wednesday and Thursday. Wednesday and Thursday, everything was hitting. And I made a video last Wednesday, so if you guys want to check that out, you know what I'm saying? Go look at that video after you finish with this one, okay? Well, I'm gonna try to break this down real slow. And today I'm gonna go over trades that happened on Thursday specifically, okay? And like I said, my previous video were trades on this past Wednesday because just it was just a really good week. So like, but like the previous 2 weeks before that, I don't know, it was wacky. It was terrible. I ain't gonna lie. But look, now I'm gonna start. Okay, so we're on GJ. What price? What if you're looking at this right? Where does it look like price is going? Is it going up or down? It's going up. Okay, so that means you're looking for buys. And in this strategy that we use on this channel, you know what I'm saying? We use supply and demand. Okay, um, it's a little bit it's easy to understand. Okay, so when it comes to supply and demand, this is what you're looking for. Before I even start, you're looking for an aggressive push up, right? So like you'll have like a little period of consolidation, and out of that consolidation you want an aggressive push up, and then you want a pullback into that area for you to then go ahead and buy somewhere in there, and your stop loss would be underneath here. Okay, so look, um we're gonna go to Thursday. All right, so boom, this is Thursday. Now remember, the market doesn't just go straight up like this. It comes back, goes up. So look, if you're looking at this, it's going up, and now this is the little temporary pullback. This would be like on like a higher time frame, okay? But now this is our entry time frame, the 5 minute, okay? So what are we doing? We're looking for breaks of structure. What is a break of structure again? This right here. So once you break that point, that's a break of structure, okay? So in this case scenario, your structure, your minor structure would be right here. And then you also have structure here and here, you know what I'm saying? Okay, so boom. Um, we get to the chart around 8 o'clock Eastern time, okay? So here we go. Let me go to 8 o'clock. So at 8 o'clock, we're right around here, okay? So in this case, we have two demands, okay? The first demand is down here. Why? Because we're getting an aggressive push up and we break structure. Where's the structure? This is a minor break of structure. This is a minor break of structure. Okay. Now, the reason why these are minor and not major is because the major breaks of structure are typically on the higher time frames, like the hourly, the 4 hourly, the daily. Minor breaks of structure is more like 5 minute and things of that nature. But it's all the same thing, honestly. Like because if you really zoom out, you could see that this is a structure right here. Like this would be your resistance and this would be your support. Think of it as like a basketball. You bounce the basketball on the ground, it's gonna go shoot up and like in the air. You know what I'm saying? You throw it off the ceiling, it's gonna come back down. Think of it like that. All right. So boom. Let me just take these lines off. So now we have a demand zone right here. So we would technically be waiting for price to come down here, tap the area, give us some type of indication to get in, and then we go. All right. And then we aim for our targets. We get two demand zones. The second one is right here. Why is this a demand zone? Because you're getting an aggressive push up. Okay. Now, you're waiting for the pullback and you're waiting for price to tap the zone. So right here, it taps the zone. Okay. Now you're waiting for the previous candle you're waiting for the previous candle break. So this is the current candle right now. This would be considered your previous candle if we were in real time. Okay. Now, since this candle starts to push back down and it doesn't break this point, now this becomes the previous candle. And same thing here. Okay. And mind you, we're still in the zone, so the it's still a valid area. Now we get this push up. We would have entered after the break of this previous candle, because remember what I said. This would have been a new candle that was being printed. So this would have been this now becomes the previous candle. So you would get into your buy position and you would put your stop loss underneath these candles. Okay. Now where are your targets? Your targets could be anything you really want, to be honest. But your first target technically should always be a 1-to-1. That's number one. Your first target should be a 1-to-1 at least. So like you wanna like I said in another video. Let's say you put $100 down on like a bet, right? Put $100 down. You're expecting whoever you're betting against to give you $100. In that case scenario, you wouldn't take the bet if they were saying 50 when you're putting down 100. That doesn't make sense. Okay, so you want to get a 1-to-1 at least. All right, and then for your next targets, you could target these little highs. You know what I'm saying? But for me, in this trade, I targeted up here. Why did I target up here? Because this is a major high. So remember what I said. This was like major structure. So this is your push, this is your pullback. Now we're expecting price to come up and break this point eventually. Okay, and then come back, and then you know what I'm saying? So this is just what we're doing right now is we're just breaking down the smaller time frame so we could get a good entry with a small stop loss and then continue with the trend, because the trend is going that way in that direction. So like you can take profit here or here or here, it doesn't matter. But I personally just wanted to see if it would come up to this major structure. So I got in the trade here and I put my take profit right here. Now you could have aimed for more or less, like I said. But what happens? Price continues up and it eventually hits the target. Okay. So that was a trade that I took on Thursday. Okay. And if you want to, you have other demand setups that happen too. Because what happens here? You get an aggressive push up. Now you could wait for price to come back down. You get another aggressive push up here. You could wait for price to come, and then this would technically be getting ready to break for you to go up. But for now, we're just gonna focus on this. Okay. So now I'm gonna go to NASDAQ. All right. I hope I'm making this simple because it's really not that hard. Like you just have to train your brain to see it. Okay. So Thursday. Gonna go to Thursday. Replay. Wait, what does that say? That says 8 o'clock, right? Yeah, 8 o'clock is over here. So, wait, I don't know how to use this yet. My bad. Okay. So when I go into the 5-minute, right? If you look at this, you see we have two demands. We have a demand here, and we also have a demand here. Now with NASDAQ, it's a little bit trickier because the thing about NASDAQ is it gets a lot of volume around like 9:30, because that's when the New York Stock Exchange open is, and like you'll start to get wicks up and down, and so like is trading NASDAQ is a little bit more challenging. You just have to get used to it. You have to understand what's going on. So the other thing I want to point out, this area right here, this is a major support level. Okay, this is a major support level. So we're still in an uptrend, all right, and we're actually breaking the major high too. This would have been the major high, and we're breaking that point. So boom, now we're coming back, and now we're breaking. Okay, but where can we enter the market? So look, We're here, it's 8 o'clock. Oh wait, it's not even 8 yet. 8 is right here now, my bad. So we're looking for a price to come into this area, tap it, and then continue up. All right. So look, we're in the zone now. Now we'd be waiting for price to break this previous candle. Okay. Um, this, well, technically this would be turning into the next previous candle because we're already here, right? So if it breaks this high, then we're going. Boom, it breaks. So look, you would put your you would enter your buy, put your stop loss underneath here, and then you would target your first year 1-to-1 and then any other highs or things of that nature. Okay. Now, this case, the trade lost. You would have lost this trade. Okay. But now we're coming to the second demand that's at a major level of support. Okay. That like it's at a level of support. So that gives you a stronger indication that price could still continue up. It didn't break this point yet. So we're still in an uptrend. Okay. So look, price taps the zone. Now it's like, okay, if we break this candle high right here, then we can get into buy positions. What happens? It breaks. So you get into a buy and your stop loss will be underneath here. So like I'll just put the thing on. All right. So stop loss will be underneath here, and then you would target first you could target a 1-to-1. So like you just put this here, whatever little that shows you where 1-to-1 is. And then after that, target a previous high if you want to hold it. So this was another trade that I took. Okay. Um, so what happens after this? Hits your 1-to-1 and it continues going up, and it even breaks the major structure. So expect price to continue up and then eventually like pull back down here and then go up again. You know what I'm saying? But you could have really ate off of this trade like this over 130. You know what I'm saying? Like this is a good trade, and it continued going up too. Like um, but yeah, like that's really it, man. Like it's not that hard. You just gotta train your brain to see these things. You know what I'm saying? Like look, um even though we saw the trade continue up, like I want you to realize that these are demands. Okay, you see these aggressive pushes up. These are demands all around. Um, this one is technically a demand, but it's not as high probability. And the reason why is because it doesn't just leave the zone clean. Like you see how it leaves the zone clean right here, and there's nothing like wicking back into the zone already. Unlike here where it already came back into the zone and then it continued pushing up. Okay, so you just have to train your brain to see it, and then like now that I say that, you're probably like, okay, but like which one do I get into? It depends on what price is showing you. Like I said, like it has to give you some indication to get in. Okay. But with that being said, also don't be afraid to take the most recent demand that's created, because let's say price does come down here, right? And you really want the entry down here, but it's giving you indication to go up. This could still be a winner, and then it could still continue just pushing up. You know what I mean? Um, before it comes down, because at the end of the day, like these gaps and things of that nature, they have to get filled eventually, but it doesn't have to happen at that moment. So yeah, like that's literally it, man. So like we broke some major structure, so we're still in an uptrend. We're expecting more demands, and we're looking for more buys going into Friday too. Like if it stayed like this, you know what I'm saying? But yeah, that's literally it, man. Like there's not really much to it. It's pretty simple. You just have to get used to it. So like this is what I want you to do. If you're watching this video, I want you to open up tradingview.com, and I want you to just go practice looking for these things. Okay? Practice looking for it. And then if you want me to show you a supply, like this would technically be a supply because look, we have a little small break structure, and then we get an aggressive push down. So this technically is a supply. Okay? But like I'm not really looking for supplies just because we're in an uptrend. So but like look what happens. You get an aggressive push and you get a break of structure. So now it's like, okay, if price comes back here and it gives you an indication to get in, you can get in. You know what I'm saying? You can get in for sells. But like I said, we're in an uptrend. So you have to be careful with that. When we're in an uptrend, we want to look for buys rather than sells. And when we're in a downtrend, we would rather look for sells rather than buys. Okay. But yeah, so like I said, open up TradingView. If you want to get the little free trial or whatever to download the replay mode, like how I just did for you guys, do that. Go ahead and backtest if you want to. I personally just never really backtest throughout. Like I just always just put my money in and it just started going. To be honest, like, um, so yeah, um, that's pretty much it, bro. Go ahead and watch this video over and over again if you have to. Go watch my video of the breakdowns on Wednesday. I'm gonna make more videos like this, okay? So with that being said, yeah, I'm out. Let's go get some money this week. All right, let's go get some money.